Good evening from Vienna, ladies and gentlemen. It's a great pleasure having Dave Cole here again. He's the president and CEO of EMX Royalty. Dave, how are you?
I am very well, and
That's
we're in an exciting position right now. It's always my pleasure to be back with you, Ronnie.
well, Dave. We talked the last time in December 2021, and I had a look at your webpage, and since then you published 13 news releases. So you've been quite busy, but most importantly, how was or how is your skiing season so far?
We've had a good skiing season, and it's interesting because thanks to the virtual platforms that we now work from, I'm able to work hard all day, and then at 2 or 3 in the afternoon, go out and ski a few runs. It's a nice lifestyle, and it helps me keep a clear mind.
Sounds great. Sounds great. So Dave, the idea of this conversation was, first of all, to talk a little bit about the macro world, what's going on. EMX is a proud premium partner of our In Gold We Trust report. We are really working 24/7 on the upcoming report that will be published on May 24th. We will publish it as usually in German and in English, but also for the very first time in Spanish. So we're all very excited, and obviously there's quite a lot going on. But then, in particular, we would like to talk about your most recent news that are really exciting. And yeah, so I think that should be a pretty interesting conversation going forward. Well, first of all, I wanted to ask you, Dave, you've been quite active recently, not only with your news releases, but also when it comes to presentations and attending conferences, like real conferences, but also virtual conferences. What is the sentiment that you're experiencing and that you're seeing in the market at the moment? Do you see that the generalists are coming back into the market? As you might have seen, Newmont Mining just made new all-time highs recently with really big volume kicking in.
Mhm.
So do you experience more interest coming from generalist investors?
Well, this is a very interesting question you're asking here, and I've seen the generalists come and go, and it looks like they're coming back, and it's fascinating because many of the generalists, particularly the young ones today, have never had any precious metals exposure. And one of the things that's interesting, most of my career, my educational background is in economic geology and specifically related to gold deposits. And most of my career was gold, 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 gold. And of course, you're a gold bug, and we all understand the importance of hard assets. But we're in an environment today where there's many commodities across the periodic table that are driving interest. And that's capturing interest on behalf of the generalist investor because they're interested perhaps in nickel or copper. And then whilst they're there, they realize, oh my gosh, these gold companies have some interesting things going on. And of course, there's the aspect of the unfortunate aspect of what's going on in Europe, in the Ukraine, and driving people's interest to find a way to hedge their portfolio. And then the underlying issue of inflation. And that is very much at the top of the news story right now. Many of us have seen this inflation forthcoming for years. Surprised it took this long to get here, actually. You cannot have negative real interest rates forever without inflation kicking in. And, and now it's coming to fruition. And that's why we like to have gold exposure in our portfolio. So it's a very dynamic situation with the demand side for metals looking strong, as well as the fundamental demand side, as well as more and more interest across the investing public.
Well, Dave, I've got a chart here from our preview chart book. Can you see the
Yes, I
PDF?
can.
I think this is particularly interesting to get like really the big picture view, because it shows that for 4 decades in a row, basically since Paul Volcker came in with the mandate to kill inflation and to aggressively hike interest rates up to 21% back in the days in 1980.
Yeah, I
Since
remember those
then,
days.
we saw 4 decades of falling inflation rates. It is also called the Great Moderation. So from my point of view, the really big question for every portfolio manager nowadays is if the Great Moderation is over. My understanding is yes, and we crunched the numbers. We wrote about that already in last year's in Gold with Trust report. But if our analysis is right, so if we're right that inflation is becoming a central concern for portfolio managers again, that also means that basically no active manager has really experienced inflation during his professional career. Because
Yes.
nowadays the average investment advisor in the United States is, I think, 53 years old. So during his professional career, he has never experienced any serious inflation. And I think this mindset is now really coming back, and many people are really questioning their portfolio construction, because the big issue at the moment is that we're not only seeing losses on the equity side, but primarily on the bond side. So the first
Yeah.
quarter was a disaster for most balanced portfolios. And obviously gold did a tremendous job in the first quarter, offsetting those losses. And I think this is really what we might be seeing going forward. Big portfolio shifts from institutional players kicking in, because they are slowly but surely realizing now that inflation indeed is becoming a topic.
That's an excellent chart, and it's hard to disagree with your conclusion.
Well, thanks. And we'll write quite a lot about this in our upcoming In Gold with Trust report, which will be called Stagflation 2.0, because it's not only inflation becoming a concern again, it's also a quite I would say disappointing economic development that we're seeing. In fact, we're seeing the recessionary clouds getting darker and darker, not only in Europe, but especially also in the United States. Now, let me talk about another chart that I thought was pretty interesting, especially for you and your investors. This shows the performance, the sector performance during an environment of stagflation. And as we can see here, actually materials, which includes obviously the most of the commodity space, but also energy, are one of the few sectors that do really, really well in an stagflationary environment. And from my point of view, I think royalty and streaming companies should do particularly well in that environment, because actually they don't suffer the problems that many, let's say, normal miners do have and do face on the inflation side. So what's your
100%
take
correct.
on that?
Mhm. My take on that is that royalties are phenomenal financial instruments, and they're perfectly created to hedge your portfolio against inflation for the exact reason you mentioned. As discovery and exploration costs go up, development costs go up, production costs go up, that's not the problem of the royalty holder. The commodity price goes up, the royalty holder reaps that benefit. And so they're fantastic assets to hold in an inflationary environment.
I think that's really one of the key takeaways going forward for an inflationary environment. I think that the royalty streaming sector should do particularly well in that environment. Just two more charts, because before I will start asking my tough questions, Dave. This is another one that I thought was really interesting. Um, from my point of view, the institutional players primarily invest into the mining space, as I've said before, by going into the large caps first. They always start investing in a new sector by investing in the big caps like Newman, for example, but also I think ETF demand, gold ETF demand is very representative for institutional players. And we can see now that ETFs are slowly starting to grind higher, and I can sense that um, that there's much more interest coming in from the institutional side. We had some record-breaking days with very high ETF flows kicking in, but I think this is only the beginning. So there were a couple of days where there were like 1 or 2 billion flowing into the ETF space, but this is just getting started, it seems. And I think one of the most convincing charts to make the case, first of all, is this one. This is one of our all-time classics that
Yes.
shows the outperformance of the S&P versus versus the GSCI commodity index, which has been coming to an end. It's stabilizing, and we expect this ratio to start rising again. So basically, commodities outperforming the S&P 500. But I think this is really the most dramatic one. As you can see here, the materials sector, the commodity producers,
Yes.
since 2013, they're down almost 70%, and they have stabilized starting in 2021 basically, but they're only up 40%. And I think, Dave, as you're such an expert in that space, I think what will really be the main trigger that many people will realize is this supply crunch that we will be experiencing, this lack of investments that we saw, not only in the energy space, but also in the base metals area and also in the gold space. So I think this will be one of the key drivers going forward, this lack of investment that is probably also exacerbated by the focus of on ESG, which makes it very hard for large institutional players to invest in the mining space. So cost of capital is obviously an issue. But what I am sensing over here in Europe, and I don't know if you see something similar in North America, is that politicians, but also investors, are now finally waking up, realizing, well, actually, we need commodities, we need resources, we need access to those resources, and actually, we want to know where our commodities come from, and we want to have reliable relationships. So, what's your take on that? This capex cycle that has suffered so much over the last couple of years, and that of course cannot be just be reversed from one moment to another.
This reminds me of a saying that Rick Rule has that relates back to this concept of cost of capital as the capital markets go through their cycles. And that is that the cure for low prices is low prices, and the cure for high prices is high prices. And what he means by that is that when you have a long exacerbated downtrend, that's an increase in cost of capital to mining companies, then they are expending less capital to develop new resources and bring on new production, which of course ultimately leads to less production and a demand shortfall, a supply shortfall. And that's where we're at that point in time right now. It's true for gold, but it's also true for copper and nickel. And that's why we're seeing these prices move. It feels like we are in a new paradigm as per your other charts. And it's a very dynamic time to be in the commodity markets, in my opinion.
So thanks, Dave. For the people that are not familiar with EMX yet, could you give us a brief, how do you say, the elevator pitch
Happy to.
about the company?
You know, we're a royalty company. We love royalties. Royalties are phenomenal financial instruments because of their embedded optionality, discovery optionality, commodity price optionality. But we're differentiated from most royalty companies in that we accumulate royalties significantly through the royalty generation process. which is the process of actually acquiring prospective mineral rights around the world, substantially in Northern Europe, substantially in North America, and other parts of the world. And we add value by coalescing existing geologic data, collecting some of our own geological data, illustrating the prospectiveness of an asset, selling that on to an industry hungry for discovery opportunity for a combination of cash, shares, work commitments that go in ground, and always a royalty at the end of the day. And that's, we've created a lot of royalties through that process, building the base of our pyramid of mineral property assets worldwide. And then to augment that, we also buy royalties. And we believe the sweet spot is buying royalties in a careful, measured manner when they make sense, when you truly see the value, not just doing it because you have to do it to grow your portfolio, which is what I feel some of my competitors do. And we're able to have greater patience because, mostly we do royalty generation work. And then occasionally we see a way to bootstrap that with a portfolio acquisition or an individual royalty acquisition. And then thirdly, we make strategic investments. And our strategic investment track record over our 19-year history is absolutely fantastic. We've netted out over $50 million in profits over that time that we've reinvested into our organic growth as well as our royalty purchasing.
Thanks. So Dave, there were two pretty exciting news coming out there. I read them and said, well, this is really fantastic news. The first one is that you increased the royalty interest at Caserones, which is a mine, a copper molybdenum mine, right?
Yes.
In northern Chile. Could you give us a little bit more of a background about that deal?
Happy to. So we already owned a 0.418% NSR on Caserones. We've already received, associated with that 0.418% of pre-tax payments, accumulating to $3.6 million over the course of the last 3 quarters. Very nice payment. This is a mine that officially has a 17-year mine life. We believe it's more likely to be 25 years or 30 years based upon our geological interpretation. There's no better deposit type to have a royalty on than a porphyry copper system because they tend to be very long-lived. So this is akin to having a 30-year bond that pays in pounds of copper, and you're exposed to the discovery optionality as well as commodity price optionality. And speaking of copper commodity price optionality, we're very bullish copper. Even before the obvious need for copper in the electrification of our transportation grid, copper was in big demand and growing. We expect, and the mineral economists who advise us expect, that the globe will consume as much copper in the forthcoming 20 to 25 years as has been produced and consumed by society throughout all of the history of the planet. So, that's a very interesting dynamic. We love to be exposed to that, and we're happy to increase our ownership in that royalty now to over 0.7%. And we're very pleased that we're able to bring in Franco-Nevada as part of that deal.
Well, actually, I couldn't agree more on your take when it comes to copper. I don't know if you saw the report coming out by Goldman Sachs. They basically, I think it was sleepwalking into a supply crunch, something like that.
Right.
Fantastic
exactly
report.
What we were talking about with respect to cost of capital, but no, I'm sorry to interrupt. Keep going.
Exactly. So we will write a very interesting chapter about that in our upcoming In Gold We Trust report. You mentioned Franco already. I think that's really obviously Franco being kind of the inventor of the royalty and streaming model, and by far the biggest company when it comes to market cap in this space. I mean, that's really, as we in Europe would say, that's the Champions League. So please let us know a little bit more about the deal with Franco, what it involves, the deal structure, and so on.
Well, I had the pleasure of associating with Pierre Lassonde early in my career while I was at Newmont Mining Corporation. And even remember him back when he was a young man on the Carlin Trend coming to tour to look at some of the properties where he had bought royalties, and always was fascinated by the business that he was building. I have an immense amount of respect for Pierre, Seymour Schulich, Paul Brink, the entire team at Franco-Nevada. They have set the stage for how you build a company. And I've always held that in very high regard. And it's one of the examples that I use with respect to building our business model. And so to have the opportunity to attract them to become a shareholder is a feather in our cap. I'm very pleased about that. I will say that Franco has specifically told me and given me permission to pass this along, that they are interested in being a shareholder in EMX, specifically because of the royalty generation work that we do. That's our differentiating factor. That is what we believe, and I believe they believe, is the most astute allocation of capital within our broader business. And they see that as a unique aspect of EMX and our ability to execute on a just a continual basis, lots of press releases with deal flow coming out of the organic side. And that's why they wanted to be a shareholder. Of course, ironically, the catalyst for them coming in was us, syndicating a deal that was a royalty purchase. So that is noteworthy.
And they are buying 3.8 million EMX shares, right?
That's
At a
correct.
price
At
of 330.
$3.30. Yes, that's correct.
Plus a warrant, I think,
That's correct.
for a five-year warrant.
That's correct. And we're more than happy to have a strategic shareholder of this type in our stock. I think it's the right time for us to bring in a major royalty name. And I like all the major royalty companies. I have a huge amount of respect for them all, but Franco is probably my favorite. And just delighted to have them own 3.5% on an issued and outstanding basis and 6.1% on a fully diluted basis.
Well, having Franco on board, and you mentioned that you know Pierre for many years. Could you perhaps elaborate what future opportunities that would give you? I mean, also probably also gives you some sort of protection from a hostile takeover bid. Perhaps it could also help you, joining forces on future deals. So, what's your take on that?
So we definitely see those added benefits to having them as a shareholder. I cannot promise that we do any deals with them in the future, but that we'll show them deals. And when we have a deal that's too big for us to be able to stomach, we'll definitely make them the first call to syndicate that deal. Happy to do so. We always have respect for the companies that are our strategic shareholders. For example, SSR owns 11%. That means that when we have a good gold project that we have generated in North America, we're going to show them first. And Newmont's been with us for a long time. We love to show them the opportunities that we generate as well. I think it's one of our hallmarks is to have a mix of retail investors, fund investors, as well as mining houses and now royalty houses own our stock.
Dave, you also settled the what was it, arbitration with Barrick Gold, and you reinvested the money that you received right away. I like it. Could you tell us a little bit more about that?
So that was not an arbitration. It was actually a legal court battle that had been in court for 14 years. That says something about the US legal system. And we're happy to have it behind us. We received less money than we feel we should have been paid. They probably paid more money than they felt like they should have had to have paid. But we did come to an amicable solution as part of a mediation. We're delighted to have that behind us. We're not in the business of suing people. We're in the business of working with people to create value. We want to focus on that. And more than happy to have taken the netted out after fees, 18.8 million USD, and put it to work with this royalty from Caserones and turn that into cash flow. I think that was the right thing to do.
Excellent. So the lawyers are happy about this.
They are.
As always.
Yeah.
Dave, could you also briefly give us an update about the negotiations with Zijin Mining?
So, of course, I cannot selectively disclose anything, but I will say that we have ongoing discussions and that they are quite communicative and professional to work with. I'm confident that we'll come to a mutually agreed upon solution.
Excellent. Well, you've been pretty active with many other smaller deals. I particularly like the fact that you're so active in Northern Europe with your. I think you acquired an NSR from Palladium One. You also, I think, did a deal with Capella, right?
Yes.
So excellent projects up there in Northern Europe, where there's quite a lot going on at the moment. I'm
Yes.
pretty excited. Could you let us a little bit more about your activities in Northern Europe in general, and why you're so is it primarily the openness of politicians there, or is it the infrastructure? What's so appealing?
Mm. Well, you're touching upon the answers right there, and I'm a little bit passionate about this particular situation. So, if you include those projects of which we hold a royalty, so we've sold and kept a royalty, then we are the largest mineral rights holder of any company in Northern Europe, and we're delighted to be able to say that. And it's across a multitude of commodities. And you say, well, why Northern Europe? Well, let me tell you, there's a whole host of reasons why. But first of all, it's geology. And, we all know that Canada is very well endowed. Well, the Atlantic Ocean is a very young geologic feature. So those mineral belts trend right into Fennoscandia. And we love to chase those mineral belts and find more metal. That's what we do. And then let's talk about infrastructure. I can think of times when I've been out in the field in Sweden working on one of our projects or reviewing it with the guys. And we got in the car and 40 minutes down the road, we were at a Starbucks. And we even just take a 2-wheel drive rental car from the airport to be able to get to our projects, and the cell phone always works. So the infrastructure is fantastic. But let's talk about the political situation. We all know that Northern Europeans have a very high level of environmental care, and they have very good protective laws on the books, but they also have very clear legislation. And this is where other countries in the world could learn a lesson. In Northern Europe, commonly what we see is it's very distinct where you cannot work and where you can work, and how you can work. And you also have to pay people well, but guess what? They show up to work. So you're getting a good bang for your buck. And so all in all, it's a great place to work. And some of the permitting timelines are the shortest timelines on the planet. We can get drill permits in Sweden in weeks. Sometimes in Arizona, it takes years. And there's a lesson here for society across the globe. And this is one of the challenges that the entire mining industry faces, and now the entire populace faces, because they need the metal, particularly if we head down this pathway of green energy, et cetera. That means very metal consumptive. And so we have to be able to permit things more quickly and more astutely than has been in the past. And I believe Northern Europe's a good place to look towards the right legislation to accomplish that.
I agree. Very much underrated, and I think we've seen big success stories like Rupert Resources recently, and I think this is only the beginning of a big mining boom, and I think that investors will realize that, as you rightly said, you're getting a really good bang for the buck up there in Northern Europe. Well, Dave, there was already quite a lot going on in the first quarter. From your point of view, what are the big milestones going forward? I know that you will be doing a roadshow in Europe. You will be attending, I think, 2 conferences. The Swiss Mining Institute conference, and then the conference that Kai Hoffmann does in Frankfurt. You'll be traveling to Paris, to London. Besides the marketing, what are you looking forward in the next couple of months?
Well, on the marketing side, I'll say I'm very much looking forward to meeting face to face again. I'm delighted to be able to return to Europe and meet with many of our investors there face to face for the first time in a couple of years since the pandemic. As the company has grown, that's what I do more and more. I do miss spending more time in the field, I will say that, but thankfully we've got a great team. They're executing on the technical side, and they're doing a fantastic job. And that is creating this continued deal flow that we just announced and build that portfolio. And you asked about catalysts. One of the key catalysts will be the Gediktepe coming in to royalty cash flow. So there is a clause in the Gediktepe royalty agreement that says that they do not pay royalties on the first 10,000 ounces. That enables them to get the mine up and running before they start paying. And they're on ounce about 4,000 right now. So they're in production, they're producing gold. We just got back from a site tour there. Dr. Eric Jensen was on that site tour. Things are going well. And we're looking forward to that 10,000th ounce being produced. And then that's going to kick in as a major point of cash flow for us on the gold side, right at the right time with respect to the gold market, in my view.
Great. Well, Dave, I think that was a pretty good wrap up of some macro stuff and an update what's going on at EMX. We are very pleased to have you as a premium partner of the In Gold We Trust report. As I've said
Thank you.
before, 24th of May is the big date for us. It will be a very, very interesting report. Until then, we will be working really 24/7. 22 people are working now on this report, and we really look forward to the moment when we hit the send button because it's lots of work, but we truly enjoy and we truly love what we're doing, and I think you do as well. I always have the feeling that you actually don't think it's work. It's more a passion that that you're having for this role. So, Dave, thank you very much. Be good, be safe, safe travels, and I look forward to staying in touch with you. And let's do an update in a couple of months. Thank you very much.
Ronnie, absolutely my pleasure. Take care.
Thank you very much. Take care, my friend. Bye bye.